Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks, and also we analyze stocks that has acquired a lot of attention during the trading sessions. And today is a latter case. We will talk about IGM Biosciences. Actually, we did the analysis of it already in the 9th of July, and there it was really a buy call. Here you can see it designated with this dark arrow, but something went wrong. And now we're actually going to analyze what has went wrong, and just to a little bit run in front and tell you why and what. It's actually all lying in non-chart analysis situation. It's all about news and corporate situation, and because there is one thing that is common for all kind of these companies, biopharmaceutical companies, it's a pipeline news. It's FDA, and this is indeed biosciences company designated here on the left, so it's very vulnerable for those news. So let's first see what was the prediction given in the previous video. The link will be given also, so you can view the full video. But shortly speaking, it was said there is a blue line, trend line 1, which is a strong recovery line, and it should actually either continue immediately for the next wave, because the previous wave was ending here. It started somewhere 8th of June, and it was expected to end somewhere actually 8th of July. Second thing that was said, that slight piercing of the trend is possible, and then this would be the buy box. Indeed, this happened. This was the second case, the second possibility that happened. The price pierced down, and then it started to volatile and get ready for expected reversal. So this was the pure technical situation until that moment, following exactly the prediction, because it was just chart analysis, technical analysis. But then starting from 20th of July, something went wrong, and the price went down all the way until the beginning of August, actually, until this recovery somewhere 28th of July. Now the question is, what has happened? Is it really a mistake in chart analysis, or it's a news, or what it is? And of course, immediate answer is there is no mistake in chart analysis, in the sense that chart analysis itself is news non-dependent. And of course, when news kicks in, especially for biopharmaceutical companies, it's all driven by news only. And that was the case here. So until the 20th of July, it was all according to chart analysis, and then the mixture of corporate news and preparation for actually quarterly report as well that took place at about 6th of August kicked in. And first we will talk about those situations, so corporate and pipeline, and then we will come back to the chart to see what's future, what's going on next. So what was actually happening here? First of all, from these days, from about 20th of July, people were expecting for corporate news and for quarter reports. By the way, corporate reports surprisingly also were actually beating positively slightly, almost matching the prediction. But still, it was not good enough to reverse completely the stock, because it's not really about the finance, but it's about the pipelines and corporate. Actually, pipeline and corporate is a consequence. So what is about corporate? The corporate situation was such that there was a new appointment disclosed at during the day of quarter report, so of in August 6th, and it was said that the new vice president of antibody discovery was appointed. And this means that actually entire antibody discovery sector was kind of in the new lead. Some considerations were there. We're not going to speculate on that, but it gives some discussions and questions. And this is one thing. And second thing is main driver down is actually the clinical trials data. It's not, of course, yet FDA approved, otherwise the movement will be really significant and final. It's more about what's going on. So for this company, there are two major pipelines ongoing. It's so-called AGM 2323 and AGM 8444. Without going to details, so the latter one, AGM 8444, is actually ongoing clinical trials, and everything is ongoing according to let's say expectations. By the way, it was just cleared by FDA for further trials, which is also like kind of positive news because it's cleared, so there is still some hope. But what really brought some scare, we think, is that another pipeline product, IGM 2023, is still in so-called dose escalation. And what is the dose escalation without going too much into, let's say, these medical pharmaceutical terms in our purely technical, chart technical channel? Well, dose escalation analysis is a situation when patients, or like if it's animals, objects of study, are giving bigger and bigger doses to understand from which point the therapeutic effect will take place. And this is a bit scary because when it is said that study continues, it means that still those doses either were not reached or not recognized, or maybe the boundaries for them are not clear. So maybe there is a huge boundary, huge range of applicability for different people, and this makes it very vulnerable for continuation and further development, and gives less chances to pass through the FDA control. And all these together with the corporate situation, the changing of the leader who will work on that, actually drive the price down. And at the moment, and now we're coming back to chart analysis, actually at the moment of 6th of August, when all this was disclosed, so it's this situation, still the price, well, there was a technical reversal, of course, here with this candle you see at the end of July, but then again, when the report was given, quarter report, still the price again slightly started to go down, because all those fears and expectations were confirmed. And it means that in near future, from the pipeline, from what we see, there won't be any huge FDA news, meaning that it will be only mainly the continuation of spending. And of course, when pharmaceutical company keeps, or bioscience company keeps spending for trials, and it's still a long way to go, of course, overall expectation goes down because these are risks involved, and some, let's say, as I said, the dosage investigation ongoing. So all this creates a lot of risks from really like from scientific point of view, so it drags the price down. And then here comes the new technical situation, and the situation is the price. Here you can see the last 8 trading sessions is always below the moving average 20, so the green line. By the way, we have 3 moving averages here depicted, you can see on the left. So the moving average 20 is now works as a resist, as a boundary, and this is the classical situation for downgrading stocks. And this is really pity, but there are many examples also on our channel. You can see when technically positive stock of biopharmaceutical companies or bioscience companies is immediately changing its trend due to news, due to some solid things. So this is the situation when the technical situation is overruled by the real situation, even though the finance still was okay. And now it's very undecisive, so it's very unclear. It probably will experience a series of volatile spikes because, again, it has reached the moving average 200, which is this red line, so it might be the volatility spike upwards here. But overall, as you can see, since moving average 20 works as a resist, usually it means that further downgrade, further correction, if you say, can happen. Well, it's not really correct to say correction, because correction is a technical term, and this is really like an expectation and general pipeline stuff driven. So in that sense, you never know what would be the real resist. Technical resist, there are, of course, you can see them, but what would be the real resist based on some solid news, it's really, really not easy to say. So speaking of technicality, here would be the first really good moment, and this would be the second one, of course. But again, this is a technicality. You can more call it not really as support lines, S1 as S2, but kind of volatility lines, because the major news will, the pipeline news, the pipeline story will in dominance here. And until we have this, it will be mainly just a volatility play, probably like some volatility movements, etc., etc. So this is really pity when a very nicely technical stock that it was until actually the 20th of July immediately turned to news-driven negative situation. So in that sense, IGMS is purely news-driven for now. So we need to wait for pipeline results and what will happen. That's it. And just to explain why this happens for biopharmaceutical companies and why it's dangerous, this is actually known danger for biopharmaceutical companies. Whenever you do your technicality, once the news kick in, it is all broken. Because what you need to understand is that the price of the stock is driven by majorly 4 parameters. So one is a real technical situation. Another one is the global market situation, like a general market movements. Here, for example, this is the COVID situation that we observed from beginning of March and then all the way down movement we saw here until 16, 17 of March, which is common for all stocks on market almost, and then recovery line. So this drop and recovery is a general thing. This is clear example of global market driven situation. And so this is the second parameter that drives the price. The third parameter is actually the finance and the pipeline, or finance and real activity of the company, and that's exactly what you see here, the reason of downtrend, yeah. Although finance were okay, but the activity and the product expectations. And the fourth, is actually market manipulation. This is usually strong for small companies, for so-called penny stocks. That's why it's purely casino, like riding up and down. Here, for big companies, it usually comes to some unusual volatility spikes and a very deep or very upwards movements. But for big companies, usually you don't see this. And if you want to, now the question is, if you have these 4 parameters driving your price, how you can trade as a technical analyst, so as a technical person? Well, you can trade it in so-called technical heavens or technical base. So when the price is not anymore determined by general market, so like we are out of the crisis, and then it's not determined by reports, quarterly reports or pipeline news, so it's before that, and then your company is big enough to sustain market manipulation. That's why we never look for penny stocks usually in our channel, and we never trade with those. And then you know that main driver is technicality. Of course, the general drift will happen from what the company is doing, but this is a general drift. It's not happening on the short midterms where you really do your technical trade. So this is important to understand. These 4 pillars for technical trade are really important. And unfortunately, for pharmaceutical or biopharmaceutical companies, this rule is usually broken often, because news kicks in too often, and these news are usually very severe. These are FDA news, they are really like killing company news. So in that sense, it's nice to trade technical on pharma companies, because when they're in technical zone, they are very technical, so they obey very well. But once news kick in, they just go crazy. And that's example what we saw here recently. So now IGMS is actually from technical trade is turning to pipeline expectation, and therefore we left it, we took the loss, and that's the same advice. Just watch for news, and as designated here, you can play on those S1, S2 lines as volatility expectors, and also here in this current moment might be some volatility. We will know by the end of this week. That was it for IGSM. We hope it was a clear explanation for what happened for the stock. Please do not forget to follow our channel in order not to miss another videos. Thank you.